Please join me in welcoming Daniel Henao.
Thank you, Michelle. Thank you. So, real pleasure to be here today to tell you more about what we're building at Mineros in a very opportunistic time in the market with a significant gold price correction, silver price correction. So great time to be learning about our industry. So thanks for your interest in learning more about what we're building. We are a significant gold producer. In fact, just yesterday we raised our production guidance to 240,000 ounces of gold. That's because we were going beyond our production guidance, having produced 122,000 ounces in the first 6 months of the year. We are also a gold developer. We're developing new mines with very interesting economics, and we're also a gold explorer. We're doing about 100 kilometers of drilling this year, and we've been acquiring assets. About 30 million ounces we have acquired in the last 6 months or so. So I really look forward to tell you more about Mineros. Before I start, please be mindful that I'm going to be making multiple forward-looking statements. Okay, so we are a growth-oriented mid-tier gold producer operating in Latin America, delivering record financial performance underpinned by record operational performance. So production is going up, our cost is going down. We've been operating two high-quality producing assets in Nicaragua and Colombia, assets that have been in production for over a century, and we're building a very interesting pipeline of growth opportunities. We have a proven commitment of returning value to shareholders. For several decades, we've been paying dividends to shareholders, and then recently, from the last 2 years, my firm, Sun Valley Investments, with my partners, we've been investing over $200 million in this company to acquire control of Mineros and then take it to this next chapter of growth. So as I mentioned, by no means we're a new mining company. We've been around for more than 50 years. Our assets have been in production for over a century, but in many ways it's a brand new opportunity. We listed in TSX about 4 years ago, and last year we managed to take control of this company and are driving all these operational improvements, unlocking a lot of value for the benefit of our shareholders. The first quarter of 2026 is a good example of what we are building at the company. More than about $300 million of revenues, more than $150 million in adjusted EBITDA. We finished the quarter with more than $200 million in gold, in bullion, sitting in vaults, and in cash. That's just in one quarter, 3 months of operations. That's the level of performance that we're delivering right now. As I mentioned, several decades paying dividends to our shareholders. The graph there shows the last 10 years of dividends. Now we're adding also a buyback program. This year we had approval for $80 million buyback program on top of a $30 million dividend that we're paying this year. We have already executed about $13 million of those $80 million buyback program. But we're also investing in our business and delivering record performance. That's why our share price has gone up about 10 times in the last 2 years. We're starting to get recognized by North American and European markets. We're starting to get included in certain indexes like S&P and TSX Global Mining Index, MSCI Gold Cap, but we're still not included in basic indexes like GDXJ, for example. So those are further catalysts. And what I want to highlight in this presentation is that despite going up 10 times, we are still remarkably undervalued. We're trading at about half of our peers from a price to NAV point of view. And very important, about 30 million ounces that are already within our portfolio don't yet have economic studies, so they're not part of our net asset value. But those are things that we're working on and we expect to add. So there's a very, very strong value proposition from a valuation point of view. The opposite happens from a profitability point of view. We're just delivering similar amount of cash as our intermediate producer peers with very high 38% margins in our operations, EBITDA. So the business is performing very, very well. This is just a very quick capital markets overview. We're trading these days at about $1.4 billion US. As I mentioned, we have more than $200 million in cash and bullion, so our enterprise value is about $1.2 billion. Our trailing revenues is about $1 billion. In just 1 year, we've generated about $1 billion in revenue, and our entire enterprise value is $1.2 billion. So that's the value proposition that I want to continue telling you about. We don't have any debt. However, we work with Moody's and S&P on a credit rating because we're preparing this company for growth. So they provided a B1 stable and S&P a B plus stable creded rating. And S&P and Atrium Research have a target price of $9.5 and $11 Canadian for our share price. We're trading at about $6 right now. As I mentioned at the beginning of the presentation, we raised our production guidance to 240,000 ounces. That's because we have already produced 122,000 ounces. From a cost point of view, we are producing our ounces below their lower end of our guidance at 22.35 approximately, and we're reinvesting in our business. More than $110 million we're deploying in our business, primarily in growth initiatives that I'll describe further now in my presentation. About $17 million in exploration alone, and we get a lot of bang for every dollar that we invest in exploration because we are a mature mining company. In fact, we own our own drilling fleet. So our drilling cost is below $100 per meter, which is easily a fourth of what our peers pay. This is a brand new leadership team. Very briefly, I want to talk about my partner at Sun Valley, Mike Dole. He's the head of technical resources. Decades with Rio Tinto, very smart geologist, mine engineer. He's leading a lot of the technical initiatives in our company. Maria Vallejo, similar kind of engineer. She has evaluated hundreds of projects for the likes of AngloGold Ashanti and Barrick, and now she's Vice President of Growth, helping us evaluate acquisitions for the company. And then Carlos Rios, he comes from two of the largest discoveries in Latin America recently, including Continental Gold, which today produces more than 300,000 ounces a year. Now moving to the assets. We operate in 3 Latin American jurisdictions, from north to south, Nicaragua, Colombia, and Chile. 2 producing mines and 3 growth opportunities. In total, we have about 30 million ounces in resources. I will spend more time in Nicaragua just because this is the immediate engine of growth. This asset is very interesting. When we started evaluating it, more than 8 million ounces have been produced from our mining properties. However, the knowledge that the company had on these properties was close to nothing. So that's the main answer the main question we're trying to answer right now is what's the real potential of this very interesting district. We operate right next to companies like Equinox Gold or Mako Mining. So it's a well-established mining jurisdiction. Mining has happened here for over a century. And as I mentioned, this is the immediate engine of growth. You can see this in the first half 2025 production. We produce about 64,000 ounces from this asset. In the same time this year, we produced 75,000 ounces of gold. Silver tells a similar story. Silver production has more than doubled in this asset. We produce about 310,000 ounces of gold in the first 6 months of this year. So very significant operational improvements happening. Focus on improving recoveries, both for gold and silver. Focus on removing historical bottlenecks, like processing capacity was a major bottleneck of this operation. So this year we're expanding processing capacity by 40%. So that's helping us unlock a lot of value in this asset. And then there's another family of initiatives focused on improving the grades at which we feed our meals. With having better mine plans, better mining methods, better controls on dilution. So that's all part of this turnaround that we're making, executing on Mineros. Very prolific exploration ground. We're not doing anything ultra sophisticated from an exploration point of view. Our two producing mines, Panama and Pioneer, in the circle of the presentation, are mines that are generating very, very nice amounts of ore, but the company had no idea what the potential was, for example, just between the two operating mines. So we're starting to drill these targets, very low-hanging fruit targets, and we're starting to find very interesting results. About a month ago, we released 8 meters at about 17 grams per ton. Those are very meaningful results from an exploration point of view, because these are intercepts that make it to a mine plan very, very quickly. And then there's a lot more that we're doing. There are 60 kilometers of mineralized trends that we're starting to explore, to investigate. So very exciting times on an already very profitable and producing platform. Porvenir, which is a red star that you see in the slide, is one of the immediate growth opportunities that we have. It's a project that was looking attractive at 31.50 gold. That's the PEA gold price that we used. 38% IRR at that price on a relatively modest capex of about $200 million. Low all-in sustaining cost of about $1,300. So hopefully this project will add about 70,000 ounces gold equivalent to our production profile. So this should take us beyond the 300,000 ounces mark, which is one of our immediate targets as a company. Very important, beyond the yellow circle you can more or less see in the presentation, we're finding very interesting targets as well that we're drilling right now. So we're doing all the engineering studies in a way that this project can double in size. So we're starting in 2,000 tons per day, but it can be expanded to 4,000 tons per day. So we expect that this 70,000 ounces production profile can increase significantly from what we're seeing, what we're drilling right now. So this is starting as a phase one, 70,000 ounces, but hopefully growing from there. Then our Colombian operation. It's been in production for over a century. It has a 12-year life of mine as we speak. Beyond that, there's about 1 million ounces in measured and indicated resources. So it's just a reliable operation. It's a unique type of mining. I would love to tell you more about this, but we don't have enough time. We'll be having a breakfast tomorrow at 7:15, and we're in booth 26. But the key takeaway here is a reliable mine. It's been in production for many, many years, and we expect this to continue producing and delivering cash flow for the company. This asset can have a growth strategy as well. We're working on this. It doesn't make sense to have a 12-year life of mine and then on top of that 1 million ounces in resources, in measured and indicated resources. We rather have a higher production profile. So that's just work in progress, and we'll continue informing the market about this. This is the latest acquisition, still in Colombia. This is a top 10 undeveloped gold deposit. 23 million ounces in the measured and indicated category. On top of that, there's 5 million ounces, in the inferred category. So we just acquired this a couple of months ago from AngloGold Ashanti. Very, very interesting opportunity for a company of our size. It's an asset that has struggled historically from a social license point of view. The previous owner wanted to build a very, very large mine, 1 million ounce per year type mine. That's not our objective. We want to be something much smaller, maybe a third or a fourth, but most importantly, we want to work very closely with the communities to share and hopefully unlock a lot of value from this asset. So remarkable opportunity for a company like Mineros, 28 million ounces in our portfolio. We just have, in a couple of weeks, we'll have a new president in Colombia, pro-development. So we look forward to working with the government and the local communities to unlock value on this particular opportunity. Late last year, we acquired also this asset. This is in Chile now, so we're moving south. 2.5 million ounces is the starting point here. It's an asset that is surrounded by producing mines. Companies like Goldfields, Kinross, they're operating there, advanced development assets. So very interesting neighborhood to be in. And it's an asset that can grow a lot as well. So we're going to be exploring here to the north and to the south. But the starting point is already great, 2.5 million ounces. So this is another growth opportunity for Mineros. So in summary, we're producing about 240,000 ounces this year. The last 12 months, we have sold about $1 billion worth of gold. Already, we have produced about 122,000 ounces gold equivalent. So the operations are happening, and we're delivering record after record operational results. Immediate target is to go beyond the 300,000 ounces. At that point, we think we will be a story that will be very hard to ignore for the market. I'm pretty sure most of you are hearing about Mineros for the first time in this presentation. So that is really the opportunity. This is not a unique situation. Most people are hearing about Mineros now. So as we deliver and become more relevant for the market, at 300,000 ounces, we're then a top 50 gold producer, and then we'll start getting recognized. Our ultimate goal by 2030 is to get to 500,000 ounces. We're working very hard on that. We're also working on acquisitions. We like what companies like Calibre did. They generate a lot of cash flow in places like Nicaragua, or in our case, Colombia as well, and deployed it in the US, deployed it in Canada, built mines in this part of the world. Those are the kind of opportunities that we're trying to lock in this platform. So that's a significant part of our strategy as well. So these are the key takeaways that I want to leave you with. First of them being the valuation, where our enterprise value at the moment is about $1.2 billion. Our revenues for the last 12 months, $1 billion. So we're trading right now at about 1.2 times revenues. Just the last quarter, more than $150 million of EBITDA. So we're trading at multiples of EBITDA of about 2.5 times, delivering excellent profitability. And then on top of that, you have all these growth projects that at this point are not reflected in our net asset value. We are delivering on our promises. Our performance is great. In fact, we're going beyond what we've promised the market. So we're generating record revenues, record margins, underpinned by this record production. We have very clear catalysts in our company, starting with the exploration that we're doing, the acquisitions, already the pipeline that we've built in this platform. And then last but not least, we have this local expertise that is very, very important to help us unlock value where others have struggled. So the company, the asset, like the one I described in Tolima, these 28 million ounces, if we're able to unlock value in that particular asset, that has a very interesting multiplier effect on who we are as a company. And that's all within this platform. So only on the production, you get a lot of value. We are paying dividends. We're doing buybacks. Capital appreciation it's certainly there with a 10x in the last 2 years, but this is just the beginning. So thank you very much for your interest. We're in booth 26. Tomorrow we're having a breakfast at 7 a.m. If you're interested, I would love to get into much more details in what we're building. And congratulations to you all for being here in this particular time in our industry. It's a great time to learn about the sector. Thank you very much.
All right.